So here's a video that gets requested quite a lot on the channel. Which UK stocks pay a good dividend and are worth investing in the long term? Now, if you're not that interested in UK stocks, I strongly think you should reconsider, and I'm going to give you several reasons why you should probably look at diversifying and having at least some holdings listed on the FTSE 100 or even the FTSE 250. But before we get into that, remember this is not financial advice. You should never trust a man on a beard who records all of his videos without wearing any pants. Yes, I know that got you thinking, am I wearing pants or am I not in all of my videos? The illusion continues. And as always, if you're feeling up to it, make sure that like button is turned blue. It's been scientifically proven by NASA now that if you do hit that like button, you are more likely to have a much happier day. And don't argue with me on that, that's coming from NASA themselves. So coming away from the non-financial advice and like button, let's talk about the two UK stocks that you can buy, invest in for life and receive a decent dividend, paying you all the way into that dream lifestyle on a beach somewhere that you've been dreaming of. But first, let's have a look at the UK itself on why it's an undervalued area. If we take out the last 16 months or so from this whole Miley Cyrus, the UK was actually undervalued anyway. Because of Brexit, the pound is massively undervalued and still has not fully recovered in my opinion. And then you've got the rumours of companies maybe moving to the EU, moving to Frankfurt, but majority of these companies now have come out and said they're actually going to keep their operations there, and some are even expanding. And if we continue looking before Miley Cyrus happened, we can see that the US and the EU had two very strong currencies and very strong economies. But newsflash, Britain didn't sink. This economy is the 5th biggest economy in the world. It's got a decent population that's growing year on year, and it has a very big retail banking sector and green energy projects coming in the future. So I don't think Britain's going to disappear anytime soon. And that could mean that there's good value just as a whole if you look at the FTSE 250 or the FTSE 100. And the reason I'm mentioning this is if you're from the US or Canada as an example, majority of your investments are probably in the US or Canada. But you should look at diversifying even your currency. For me, for example, I have the US, I have Canada, Europe, UK, France, Germany, all in baseline currencies. And the reason for this is it's another level of diversification in my portfolio. If I'm buying a company, I tend to try and get it in its local headquarters rather than get some OTC, and Rolls-Royce is a good example of this. You can go and buy an OTC, RICE or whatever the ticker is in the US and get it valued in dollars, but reality is their operations are working more in the UK. So if you wanted to buy the company and not have that currency risk, for me personally, I'd prefer to have it in pounds. But then, like I've just told you, you then have the undervalued pound. So if you had a strong US dollar and you bought in a company in pounds, the company goes up, you're winning twice because the currency goes up as well. And then when you convert it back to US dollar, hopefully the dollar's a bit weaker, and then you can win twice, as I've said. So I think this is a really underlooked argument, and YouTubers and people who are offering financial advice don't really talk about it too much. Now, hopefully that wasn't too boring and you got the point across, and we've managed to keep 1 or 2 Canadians or Americans with us. And if you're watching not from the US, Canada or the UK, let me know your location down in the comments so I can track you. Of course, I'm joking. I'd just love to know where my audience is watching from. Coming on to the first ticker, you guessed it if you've been here a while, BP, British Petroleum. BP is currently a £63 billion market cap, and it pays you a solid 5% dividend. Now, they did cut this dividend recently and it could go back up in the future, but who knows, reality still 5% in my opinion is solid. BP and oil majors tend to be one of the safest when it comes to getting a dividend as well. So I think if you're looking for a UK company that's got a good value and a good future that pays a dividend, I think BP is definitely one of them to look at. Now, with the world reopening, oil prices should slowly increase, which means BP's revenue should also increase, but that's not the only reason why I like this company. I've done numerous videos on this company on why I like it, but mainly the renewable sector. Now, it's no secret BP CEO Bernard Looney wants to move BP into a more green energy style of company. And they're actually doing it. They've got many projects going on in many different sectors of renewable energies, from wind to solar to bios and many more, and they will still keep doing the oil projects. So I think BP does have a bright future. And again, coming back to the UK, Boris Johnson, the Prime Minister of the UK, has said he wants the UK to be a world leader in renewable energies. So there will be many renewable contracts coming from the government sector. And with the size of BP and the trustworthiness of the company, and the company being in line with the UK's goals to be a green energy producer, I think BP will do well in the long run in terms of growth alone. And just looking on the chart, if we go pre-Miley Cyrus, BP is currently undervalued about 40%. Now again, that does not mean it's going to go there. Not financial advice, don't sue me. But if we did go back to them levels, then that's a 40% gain in itself. And while we're waiting for that to happen, we're going to be getting a 5% dividend. So my approach is simply buy as much BP as you can, as low as you can, continue buying as low as possible, and receive them dividends and see where it goes. I think in 50 years' time, a pub trivia question will be, what does BP stand for? And people will be shocked that it was actually once an oil company. That's the way the world's going, and I think BP will be one of the largest renewable energy companies in the world. Now, before we move on to my second favorite UK dividend payer, if you sign up on eToro on the pinned comment, you can sign up, deposit, make a trade even into these companies, receive your dividends, but the best thing, you get access to the LWT eToro chat room. I'm in there daily and I talk about what stocks I'm looking at and sometimes even share my current portfolio. Now the second one is LGen, ticker LEGN, or better known as Legal & General. Legal & General is well diversified in itself, financial services, insurance, and many other types of product. I think this company in itself is a solid payer of dividends, but also will have a steady growth. And the best part about it I'll come on to in just a second. Now looking at some of the fundamentals here, Legal & General is a £16 billion market cap company, and it's got one of the best price to earnings ratio I've seen in the last year. Legal & General's PE ratio comes in at 12, and if we go pre-Miley Cyrus, at the recording of this video, there's around about a 10% move to the upside if we just get to them previous levels. Now I know Legal & General is not as sexy as BP, but there's a reason why I picked it. It's a very volatile company. And if you just look at the chart over the last 5 years, you can see it's very easy to buy into dips. This company is quite a volatile ticker. So if you set some trend lines and you buy at the bottom of these, you're going to get a better value dividend. For me, really, I'm not looking at buying LGen as it stands right now because I know I can probably get it a 10, maybe even a 20% discount in the next year or two at some point. I've got many alerts set on this ticker, and I think if you continuously buy some of the lows and slowly scale in, that 6% dividend will be great, but it'll be a lot safer trade because you have a better entry on this ticker, and then you can have even more upside in terms of growth with the company. I don't think this company will go to the moon. I don't think it's that type of play. I just think it's genuinely a channel style trader, and if you buy the lows, you can live on the dividend and continuously increase your position into them big low days. Now again, with the world reopening and the UK focusing on renewable energies and financial services in its new life outside the EU, I think this company does have a bit of potential, but again, I do not think that you will see massive potential that you see in BP. But that's the whole point of this, having two companies that pay you dividends and are focused more on dividends rather than growth. If you're interested in growth stocks from the UK, let me know down in the comments. I'll make sure that video comes as well. Now, I just want to say it's very hard to just pick two companies from the UK that pay dividends. There's many good ones out there and many that I am personally invested in. These two are just some of my favorites and some of the more easier traders for new investors. So that's why I picked them. But I'd love to know what your thoughts are and what your favorite dividend stocks are in the world. Let's move out. Let's talk about the whole world. What are your favorite dividend stocks, apart from stocks that are based in the EU, because we've already had that divorce. But if you want to know what stocks I'm buying and selling and what my dividends actually look like, there's a Patreon link down in the description. There's some very cool perks there starting at like $5 a month, and you get to see what my portfolio is every single week. You can also message me direct there. There's a chat room and a WhatsApp group, so feel free to go and have a look around. And I'm going to leave you with the biggest tip when it comes to dividend investing as a whole. If there's any Americans, Canadians, or anyone else outside of the UK watching this, let me know down in the comments. I'm very curious if you made it this far. But the biggest tip I can give you if you're looking at dividend investing, regular investing is the key to success here. Find stocks that you love, find stocks that you know have very limited chance of bankruptcy, and you can continuously buy into. BP is one of my favorites, as I've said, because as it was downtrending over the last year or so, I was continuously buying. I knew this company wasn't going to go bust, and I was very happy to increase my average, and it's actually my largest holding in full disclosure. Some people would call me crazy, but it's definitely not anywhere close to like 50% of my account. It's actually, I think, like 6 or 7% of my total account in terms of what I have as a holding including cash. So I was very happy to get BP on the way down, and I would continue buying into it. And I'd love another pullback down to them levels. I just don't think we're going to get it. I think that recovery's happened. But again, the regular investing approach does work. So if you continuously buy, you get a good average, and then you get your dividends along the way. That's the only thing you really know when it comes to dividend investing, is buy in regularly, sit back, relax, and enjoy them pina coladas when you make it to the beach. If you haven't done so already, make sure that like button is turned blue, and I'll see you in the next one. Take care. Peace.